Good day, Matrix. We are going to complete task 4.34, completing the cash flow statement and answering the questions that follow. So again, this time around, you need to complete note 7 and note 8. In your textbook, it will be a bit more clear, so please refer to your textbook on page 216. We have notes over here. They told us that our authorized share capital is 1,500,000 ordinary shares, and they told us that we've issued shares during the year, 1 million shares in issue at the beginning of the year, and I know that this is going to equal 2 million rand. Okay, then they also said that 200 shares issued at the 30th of June 20.1 at 2.60 cents each. So how do I work that out? I'm going to take the 200 issued shares multiplied by 2.60 cents. If you work that out, you should get 520,000. Then they also said 280 shares repurchased on the 31st of December. But if you go through your notes, there is no way that they tell you how much you repurchase the shares for. So what are we going to do? We are going to work back. So during the year, this is the shares that I've issued and repurchased. So 1 million, adding 200 shares, subtracting 280 shares should give me a total of 920 shares. 920,000 shares. And that 920,000 shares is worth 1,932,000, because that's your year end. 1,932,000. Now I am able to work back. So 1,932,000 subtract 520,000 subtract 2 million, which will give me a value of 588,000. Okay, so in order to work out my capital amount decrease in cents, I will take 588,000 and divide it by the number of repurchase shares, 280,000. Times 100, which will give me 2 rand 10 cents. All right, so if I want to get the value of the repurchase shares, the average price, it will be 2 rand 10 cents. I hope that is clear. So let's just fill in our values. There was no space, so I put the 200 shares issued on top and taking into account my month and how much I sold it for, which gave me a total of 520,000. And remember, your repurchase shares will be represented in brackets because money has left the business. And we all know how we got the average price where my capital will decrease by. Okay, if we work it out now, it should equal 1,932,000, which is the value we get over here. Okay, next one we are going to be doing is your retained income note. This question mark represents your repurchased shares, and you know that you have repurchased 280,000 shares. All right. Your retained income at the beginning of the year, I'm looking at my balance sheet. Retained income at the beginning of the year was 1,156,000. Okay, they gave me my net profit after tax. And remember that your repurchased shares should be at a different value. It wouldn't be the R2.10 that we have worked out over there. I want to know my retained income decrease amount. So again, we're working back. If you look at your textbook, they told us that interim dividends of 12 cents per share were paid to shareholders in the share register on, date is very important, the 31st of August 20.1. Now I'm taking you back to your ordinary share note. Please note that in the beginning of the year, you had 1 million shares in issue. Then the 30th of June, you issued an additional 200 shares. The 31st of December is when you repurchased the 280,000. So what date came first? The 31st of August 2001 or the 31st of December 2001? Obviously, it will be your August date. So what is the issued shares that you have in the month of August? Before you repurchased your shares, it was the 1 million and the 200. So I'm going to work out my interim dividend, 1,200,000, and they told me it should be multiplied by 12 cents. That should give me a value of 1,200,000 times. It should give me a value of 144,000. And then I'm going to be doing the very same thing for the final dividend, also known as your declared dividend. So again, date is taken into account. Final dividend of 21 cents per share are due to shareholders in the share register on the 31st of March 2002, which is the following year. Taking into account that December 2001 came before March 2002. So now you have taken your balance at the beginning of the year, the additional shares issued, and the 280,000, which will give me a total of shares issued worth 920,000. Now I'm able to work that out. 920,000 times 21 cents will give me a value of 193,200. My interim plus my final dividend will give me my total dividend, which will be represented in brackets 337,200. All right, and remember, with my retained income at the end of the year, they have given me the figure over here, 1,413,800. Now I'm able to work back in order to figure out my repurchased share amount. 1,413,800 adding 337,200 subtracting 861,000 subtracting 1,156,000, which should give me a value of 266,000 rand, and it's represented in brackets because it's an outflow of cash. Now in order to work out the actual cents retained income cents to get that value would be 266,000 divided by the amount of repurchased shares, 280,000 times 100 should give me a value of 95 cents. At 95 cents, to get the total amount of the repurchase shares, I will take the 210 cents, which is 210 cents, and I'm going to add the 95 cents. Which will give me a total of 3 Rand 5 cents. That was the total amount of the repurchased shares. And remember that total amount will include your capital decrease and the retained income decrease. Okay, so let's fill in that. Filling in our totals. Balance at the beginning of the year is 1,156,000. The net profit after tax was 861,000. The value of your repurchased shares was 266,000. The dividends for the year came to 337,200. And obviously we worked the interim and final dividend out, which came to a total of 144,000 for paid and 193,200 for declared. The balance at the end of the year, if you work out, would be 1,413,800 Rand. Okay, we can work out our cash and cash equivalents. Now actually our note 1, reconciliation between profit before taxation and cash generated from operations. What am I interested in? My profit before tax. And you would have seen that the profit in our retained income note, they told us net profit after tax was 861,000. And in our additional information number 1, they told me that income tax per income statement for 20.2 financial year is 369,000. This is 30% of the income tax. Alright, so what am I going to do? This is my income tax amount. I am going to take the 861,000, my profit after tax. I'm adding the income tax amount of 369,000, which will give me my profit before tax worth 1,230,000. I hope that is clear, because I will put the calculation down over here. My profit after tax plus the income tax amount which will give me my profit before tax 1,230,000. Alright, there is a little bit of a note here when we come to our adjustments in respect of depreciation and interest expense. I will be taking into account the loss on sale of asset. Please note your asterisks. Loss on sale of fixed asset is in context of cash flow statement. The loss on sale of asset in context of cash flow statement is for enrichment only. But I am going to take that loss into account when it comes to the adjustment. So let's work out our loss. Fixed assets were sold during the year. Selling price 200,000. The cost price of that asset was 500,000. And I'm subtracting the depreciation amount worth 275,000. Okay, and that should give me a total of 225,000. So that is my carrying value. If I sell this fixed asset for more than this carrying value, I make a profit. If I sell it for less than, I make a loss. And clearly we sold this vehicle or equipment, they just say fixed assets, for 200, so I made a loss of 25,000 rand. Okay, I'm just gonna insert it over here, the loss on sale of asset, the 25,000 rand. Okay, and then in order to work out my depreciation, I am taking you to this point over here. I'm working out the fixed assets, looking at fixed assets, balance at the beginning, got purchases, disposals at carrying value, and then our depreciation, and then our balance at the end of the year. Okay, so where am I going to get this information from? I will get it from, let's just erase this. I will get it from fixed assets over here. Okay, and obviously our fixed asset additional information note 5 and 6. They told us that fixed assets were bought during the year for 2,216,400, and they told us that we sold fixed assets as well. And remember, I am interested in the carrying value, which we worked out over here, which was 225,000. All right, where am I going to get my balances? The balance at the beginning of the year for my fixed assets was worth 2,300,000. 2,300,000, and then they also told me about my balance at the end of the current year, which was 3,616,400 rand. All right, then they told me, remember the purchases, I purchased fixed assets, and that worth, I went through it in your adjustments, was worth 2,216,400. All right, then we had disposals. The cost price of that disposal was 500, and I'm subtracting the depreciation of 275,000, which gives me disposals at carrying value worth 225,000 rand. Now I can work out my depreciation working backwards. So 3, and remember, when you're working backwards, things that should have been added will now be subtracted. Things that you should have subtracted will now be added, working backwards. Right. So 3,616,400, add 225,000, subtract 2,216,400, subtract 2,300,000, should give me a depreciation value of 675,000, and that is how I would work out my depreciation, which would then go to this adjustment over here, the 675,000. And now interest expense. Okay, there is a little bit of a adjustment here as well. They told us at note number 4 the interest rate on loans is 15% per annum. The new loans were obtained halfway through the year. Interest is not capital. All interest has been paid. The loans will be repaid in 2005. So if you look at your loans, you will see that I've got loans in 2001 of 300. I had that halfway during the year, and then there was an increase to 1.5 million. Remember, it's 15%, and we had it for half a year. So the first loan was worth 300. My interest is 15% times 6/12, because I only had it for the half of the year. 300,000 times 15% times 6/12 gives me a value of 22,500. Then I have to work out the second loan value, which was 1.5 million times 15%, and I had this new value for the next 6 months, which gives me, if you work it out, the value of 112,500 rand. The value totaling these two up will give me the total of my interest expense. You will show your calculation over here. So it's the 22,500. Let me just double check. Okay. 22,500 plus the 112,500 interest expense is 135,000. Okay, now I'm working out the operating profit before changes in working capital, adding all those figures up, and it should give me a total of 2,065,000. Then there was a decrease in inventory. If there's a decrease in inventory, I'll represent it as a positive, meaning inventory has left the business. The only way inventory leaves the business in an ethical way is when people actually purchase your inventory. So it's an inflow of cash worth 140,800. And there was a decrease in your debtors, and they didn't give it to you in a table form. They gave it to you in adjustments. So please take note of the adjustments. Okay. Usually you're only interested in your debtors and your deferred income, and that's it for your trade debtors that you're wanting. But you will see that our trade and other receivables, that would be the total of everything that would be in your trade and other receivable columns. All right, so what you're gonna do is you are gonna go and subtract. Look where you will see anything here. They say note number 1, SARS income tax balances. In 2002 it was 49,000. Recognize the debit. And then in 2001 it was 163,700 rand, and that's in a credit. Please note that SARS income tax is a liability, and liabilities increase on your credit side and they decrease on your debit side, which means that 49,000 rand is in a debit, which falls under trade and other receivables. This needs to be taken out because you just want the value of your trade debtors. All right, so this is how we will show it. $432,000 subtract the 49,000. You do not want it, you only want the value of your debtors, and then you will subtract 294,000, which is of the previous year, to give you the difference, and that difference would be 89,000 rand. You'll do the same for creditors. Again, they didn't give you the table form where you can just simply see differences between creditors. You have to look at your adjustments, and again they just want your creditors. So here we have SARS that needs to be subtracted, and you'll also see that I need to subtract the 193,200. Where did I get this value from? I got it from working out my retained income, the final dividend declared, which means it was actually not paid to your shareholders. Shareholders for dividends, right? You see our values. So let's work that out. This is a longer one, so I'll just do it over here. $889,000 subtracting 193,200, because that was the shareholders for dividends. So let's go back to the trade and other payables. Here's my 889,000. I'm subtracting my shareholders for dividends for this year, 20.2. All right. And then for the next one, the value of my creditors was 923,700. I am then going to subtract the SARS, because I'm not interested in that SARS. I want creditors alone, trade creditors. So I'm subtracting that SARS. I'm taking it out, and I will be subtracting the 120,000 because I'm not interested in that. I just want my trade creditors amount. Right, so let's do that now. 923,700 subtract 163,700 and subtract the 120,000. If we work that out, you should get a value of 889,000 minus 193,200. Okay, note that one gives me 695,800, and I'm subtracting so I can get my difference. 923,700 minus 163,700 minus 120,000, and it gives me a total of 640. So now you have the actual balances of your trade creditors between the 2 years, and you can see that there has been an increase in your creditors from, this is representing 20.2 and that's representing 20.1. So from 20.1 to 20.2 there has been an increase in your creditors, and that will be represented as a positive number, 55,800. Okay, then I can work out my changes in working capital, which will give me a total of 107,600, and I can put that, not yet, add these two amounts to get the total of my cash generated from operations, 2,172,000. 2,172,600. Note 1, 2,176,200. My interest paid We worked it out over here. It was 135,000. It's represented in brackets because it was an outflow of cash. Our dividends, which we need to work out. The balance at the beginning of the year for shareholders' dividends was 120,000. Okay, and then the new balance for the new year is 193,200. Where will I get dividends paid and recommended? Over here in our retained income note, which we worked out, which was 337,200. Balance at the beginning 120. Balance at the end, which was 193,200, and then the dividends paid and declared, we worked it out to be 337,200, which gives me a total of 264,000. Taxation paid, the amount owing at the beginning of the previous year, they told us that it was, yes, SARS, 163,700, and the 49,000 a debit balance. Please take note of that. So meaning it will not be represented in brackets. Usually if it's in a credit balance, that is still owing to SARS, so you will represent it in a 369,000. That's 49,000. Total amount 581,700. How did I get my income statement amount? They told me in adjustment number 1 that 30% of that amount will equal your tax. Well, here's it, show 369. The 30% you'll take the profit before tax times 30% should give you your tax amount, which is 369,000. All right, so I'm taking that. Interest paid, number 4. Dividends paid is 3 and 4. Dividends paid 264,000. Tax paid 581,700. If you add that up, you should get a total of 1,191,900 for operating activities. Purchase of fixed assets, they told us straightforward that we purchased a fixed asset worth 2,216,400. It's represented in brackets. It's an outflow of cash. Then they told us that we sold our vehicle or our fixed assets for 200,000, represented as a positive because it's an inflow of cash. There's an increase in our investment if we look at financial assets. Here's our financial assets. We have an increase. You work out that increase, which means we have invested more money into an investment. It's an outflow of cash, and that should be 22,500. If you work that out, your investing activities should total 2,038,900. Proceeds of share capital, yes, we obviously sold more shares, and the total would be 520,000, which came from this section over here. All right, and then the repurchase of shares will give us a total of this amount, 588,000 plus 266,000. All right, or you can say 280,000 multiply by 305 cents. Remember, that would be the total of 210 cents and the 95 cents. So that will give me a value of 854,000. Proceeds of long-term borrowing. We took more loans out, and the difference between the 2 years was 1,200,000. If I work out my financing activities, I should get a total of 866,000. Okay, my net change in cash and cash equivalents should give me 19,000. Okay, that would be your cash flows from operating, investing, and financing. And then your balance at the beginning of the year was 51,000, and that should give you 70,000. To make sure of that, cash and cash equivalents, here we go, 70,000 and 51,000. If you work out the difference, you should get 19,000. All right, so we can quickly fill that in. Okay, and that's it. Thank you.